Good evening, everyone. This is Financial Literacy 101, and tonight, this evening, we're going to talk about option trading, okay? Option trading. Tonight is going to be a lot of defining things, trying to understand what option trading is, and then the second part is going to be the most technical part, okay? So you guys have a heads up about how we're going to attack this thing, because option trading is a phenomenal way for you to make money regardless of where the market is at. Regardless, whether it be a call option or a put option, which are your two options, call options or your put options. But we need to understand that the stock market, moves three ways. The stock market moves up, and the stock market moves down, and the stock market moves sideways. Now, some of you are saying, well, I understand how the stock market moves up, and I understand how the stock market moves down. But what do you mean by sideways? What I mean is, if a stock is $20 today and 4 months later the stock is $20, that means that the stock has literally moved sideways. It didn't go up or down. It's simple. I know it's simple. Very, very simple. So let's get into some information so we can better define what option trading really is. What option trading really is. Now, granted, we understand that when you invest and you are only investing to see your stock shares increase in value, you only have a 33% of winning. You only have a 33% of earning on your money. Because again, if stocks move up, down, and sideways, that means that you only have a 33% chance to make money. That means there are a 66, 67% chance you're losing out of money. And granted, if you only are investing on stock moving up, then you will eventually fail. And then you say, well, I use the buy and hold method. Now, the buy and hold method is a good method if you don't understand how to invest. I know. I am poking the bear here. I'm poking the bear because I like to buy call options mostly because, quite frankly, for the past 3 to 5 years, the stock market has been doing very, very well. It's been breaking records. So I've been doing really good doing call options. But even in a down market, there's tons of money to be made. Because we understand that a pull option, you're banking on the stock market going down, and quite frankly, the stock that you are invested in. Okay, the buy and hold method. Let's talk about that really quickly. Today I did a stock review on Ford. Okay, Ford Motors. So you take a stock like Ford, if you invest in Ford when it was around $15, anywhere from $15 to $13 a share. Now Ford is $6 to $7 a share. And over the past year, Ford has been decreasing in value and price of stock consistently going down. So a lot of you have lost a lot of money, but you are banking on, you are hoping, you are wishing, you're taking analytics and statistics that Ford will go back up. But there is no guarantees in investing, is it? The buy and hold usually results in you losing money because of one fatal factor. Yeah, fatal. One fatal factor is inflation. Inflation. Now, you're probably saying, well, at least I'm collecting dividends. Do you understand that most companies don't give great dividends? And if they do give great dividends, then your price margin are a lot higher for that particular stock. Take, for instance, Ford. What are Ford dividends at? 15 cents a share. And you're saying, well, Ford is a good company. Yeah, they're a good company. They invented one of the first cars, the Model C. They invented the assembly line. But that doesn't make them a good stock to buy and hold. See, if a stock goes down, investors lose their mind. Investors lose their mind. They panic, right? And they want to sell. Any time is a good time to get in the market. People say, Ross, when do I get in the market? I tell them now, today, right now. There's no ifs and buts about it. Because if the market is down, people are making money. If the market is up, people are making money. If the market is going sideways, people are making money. Now, the glory, the fun in option trading is that you take a stock like Amazon, you take a stock like Google, you take a stock like Tesla, where their stock share price is over $1,000, and you're like, I don't have enough money to buy that stock. Well, options give you the ability, it gives you a point where you can actually buy in. You can actually buy in at a fraction of the cost, okay? See, the power of call options allows you to increase your profit potential. It does. So if you are only doing ETFs, if you're only doing index funds, if you're only doing bonds, if you're only investing in gold and silver, platinum, palladium, if you're not investing in option trading, I don't know what you're doing. Every investor I know that knows how to invest on a well diversified platform, they do option trading. They do option trading. We're going to get into strike price. We're going to get into expiration dates. We will get into intrinsic value. We're also going to touch on PE ratios. I know, it's a lot, but we're going to break it down Bonnie style, and we won't be here too long. Because when you buy options, options offer leverage for growing a small trading account, basically a small bank account. Now, whatever you think small may be, that's what it is. You know, I have $100 to $200 to invest every month. Okay, so that's going to be a small account. So what are put options? Because we talked about call options, right? Call options, you are banking on the market going up. You set it at a certain strike price. Now we're kind of just doing a brief really quickly, and we're going to dive a little bit deeper into the definitions of these things, okay? We're going to dive a little deeper into the definition of these things. But a call option, or essentially, you buy that option, usually 100 shares of the option. That's what the option contract really is. And you buy it at a particular strike price. It doesn't mean that's the price of the stock. It's at a particular strike price, which you are banking that stock is actually going to reach and go over, and that's where your profit is. Now, a call option is the exact same, but you are banking on it decrease to the put that you put the strike price at. So you are banking on that stock going down at that strike price. And strike prices simply mean gold price. That's my goal. I want it to drop down to $7 from $10, and you'll be up this amount of money. Now, you never want to hold an option to the expiration date. No. Take, for instance, if you have an option that's 2 years, you probably want to hold it for about 18 months. If you have an option that's about a year, you want to hold it anywhere from 6 to 9 months. If you have an option that's a month, you probably want to hold it for about 2 weeks, like you see me do. And I make, $500 to $1,000 off a month option because I'm not waiting for the expiration date. Because closer to that expiration date, all these things are being tracked. And the volatility, market correction, prices going up and down will have you to lose tons and tons and tons of money. It actually will. So it's imperative that you take some of these tricks and some of these analysis for your good. See, the longer you stay, the more risky it's due to pullback days. Okay. And like I said, market correction. Those pullback days really hurt when you're getting close to the expiration date of your option, because maybe you were up $500 and then that pullback date now have you down to $100. How do I know this? Because I've done it. Sometimes now, granted, when I first started option trading, I did that in order to really define and research and have some tangible information for me. Is this very valid information that people are actually teaching and preaching and showing me about? And it absolutely is real. The closer I got to the expiration date and I held onto the option, my option decreased in value. I went from 500 and then I did it live. I forgot what option I was in, but you guys saw me go from $400, $500 to around 100, and I had to sell it quick because it was dropping and my expiration date was the next day. Now it was already up I want to say 230 something percent. I want to say it was Plug. I want to say that it was Neo. I don't recall, but let me see here. Let me go over it, and I just want to show you one option that I have. We're going to get on 4 because 4, we're going to use 4 as an example. But I'm going to go to my portfolio and I'm going to pop up my option, okay? And this option doesn't expire to December, okay? It doesn't expire to December, and I'm already up 100%. I'm already up 100%. So I'm going to share my screen with you very quickly here so you see exactly what I am talking about, okay? All right. So as you can tell right here, this is an option for Plug. I have a $10 call, meaning that I want Plug to reach $10, okay? I want Plug to reach $10. Let's look up Plug. Let's see what Plug Power is at. Plug Power is over $10. That was my call, and I stretched it out all the way to December. So now that it has reached a strike price, anything over that amount in percentage, I'm profiting my money. So let's go back. So my call was $10. My strike price was $10, okay, at 10. So now that it's over $10, okay, now that it's over $10, look at my total return, $233. So if Plug continues to go up in value, this amount of money of my return is going to increase as well. Right now, I'm getting 100% on my investment. 100%. Now, some people like, as long as I get 25%, as long as I get 33%, as long as I get 50%, I'm doing well. I'm getting 100%. All right, let's go back. Let's go back. Now that we, okay, Biden versus Trump, who wins? We got a troll in the room. If I have any moderators, get them out of here. Anyway, we're trying to learn here, ladies and gentlemen. We're trying to learn here. So anyway, all right, let's listen. Let's listen. So let's go over some information, and I'm going to break down the book answer of what an option really is, okay? An option is a contract that allows an investor to buy or sell an underlying security, which is a stock, an underlying stock, whether it be an ETF or even an index that is predetermined price, okay? Again, I was banking on Plug Power hitting $10 because I bought it prior to that, predetermined, okay? Price over a certain period of time. Buying and selling option is done on the option market. So it's a total different market, which trade contracts based on stocks, aka securities. Buying an option that allows you to buy shares at a later time is called a called option. Whereas buying an option that allows you to sell shares at a later time is called a put option. However, options are not the same thing as stocks because they do not represent ownership in a company. They don't. So it's not like saying, oh, I have an option contract is 100 shares, but you have no shares in that company if you were to buy a whole share of a company. So if I bought a contract for Ford, I bought one contract, 100 shares, I have no equity, I have no assets within Ford Motor Company. But if I buy one share at $6, $7, I own a piece of that company, a very, very minuscule, very small, very fractional share of that particular company. Okay, and although future use contracts, just like options do, options are considered lower risk due to the fact that you can withdraw. This is very important. They are considered lower risk because you can withdraw or walk away from the option contract at any point. The price of the option is premium. That's the percentage of a aligned asset or security. Now, this is the great thing about option trading because you can walk away at any time. You can walk away with your earnings. You can walk away with your loss. And in some cases, you walk away zero. You didn't lose, you didn't gain, which is absolutely great, okay? When buying or selling options, the investor or trader has the right to exercise that option at any point up until the expiration date. And we're going to get in the money. We're going to get into out of the money. So simple buying or selling an option doesn't mean you actually have to exercise it at a buy or sell point. Because of this system, Options are considered derivative securities, okay, which means their price is derived from something like the value of assets, the market securities, or underlying instruments, okay? Blah, 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 blah. We're going to break it down. For a reason, options are considered less riskier than stocks if used correctly. And that's true because, again, you can get out of option at any time. You can. It's very important. So call options. You're asking yourself, what is a call option? A call option is a contract that gives the investor the right to buy a certain amount of shares, typically 100 per contract. And that's where you can't just buy half a contract. You're going to buy one. It's whole numbers, 1, 2, 3, 4, 5. And within that contract is 100, 200, 300 shares of a certain security or commodity, okay, at a specified price over a certain amount of time. As I show you, my expiration date for that plug power option is reached all the way out to December 8th. Now, I'm holding on to it maybe up until the first part of December because plug power is doing good. And even if a pull back date occurs, I don't see it dropping below $10, okay? That's just for me. For example, a call option will allow a trader to buy a certain amount of shares or either stocks or bonds or even instruments like ETFs or index at a future time. So if you're buying a call option, it means that you want the stock to go up in price so you can make a profit off your contract by accessing your right to buy those stocks. I'm going to say that again. It means you want the stock to go up in price. This is for a call option. So you can make a profit off your contract by exercising your right to buy those stocks, by exercising your right to buy those stocks, and usually immediately sell them to cash in the profit. And if anyone ever seen me, I wish I would have went back and showed you where I sold my options and I made $600-700 right live, right here on Ross World, Financial Literacy 101, right before your very eyes, right when the market happened. I mean, I'm waiting for the market to tick, 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 and then boom, I sell that option. And some of you have seen that. Now, granted, guys, if you're in a room, you like this video, give it a thumbs up. Oh, also, by the way, this to show you my shirt. Oh, let's see this really quickly. It's like one of those commercial breaks. I got to sell some products. But this is one of the new shirts I have. And it says here, spend your money on material things. Spend your money on material things. Now you have a bunch of stuff. And then this one says, now you broke. And on the back of this shirt, it has invest, okay? It has invest. So that's just showing you the back of the shirt right there, invest, okay? And then I have one more shirt, this coming in showing you some samples here, okay? This the Ross World logo right here. And then on the back of this shirt, you have Black Logic, okay? That's what that's saying right there. Invest in stocks and bonds, gold and silver, and that equals wealth, okay? This is an investment shirt. You guys want something different from your everyday plain shirts. There you have it, okay? So let's move right along. Let's move right along. Now, call options. The fee you are paying to buy the call option is called a premium, okay? Essentially, the cost of buying the contract, which will allow you to eventually buy the stock or security. So in this sense, the premium of the call option is sort of like a down payment like you would place on a house or a car. It's like, you know what, I'm gonna put a down payment on this because I may buy it or I may sell it. That's all it's really saying. So when we go to, excuse me really quickly, I'm gonna share my screen with you guys. Let me go back to forward. Okay, so let me break this down just a little bit better than I did, okay? All right, so again, strike price, okay? Your fee that you're paying, okay, the fee that you're paying. So in this sense, the premium of the call option is sort of like a down payment, okay? Like you would place on a house or a car. So what I like about this right here, it explains it very vividly that So 4 is essentially $6.82. So if I'm gonna go down to 6.5, it's like to break even. It needs to go up essentially a dollar. Excuse me, get that out the way. 1.32%. Okay, at a change value of a negative 4.65%. So essentially, you need to come all the way up here to a 7 call in order to make some real money. But granted, you can hit sell call at a certain price. Let me go back. And look, it gives you the chance of profit right here. So Robinhood really does a good, clean job of showing you your chance of profit on certain calls. It really does. It really does. So let me not speak over your head too much because I'm breaking this down. This is the first video out of 1. So let's go back just a little bit. We're going to get into some definitions so it can be a lot clearer for you. It can be a lot clearer for you, okay? All right. So let's get into it. So call options are something like your insurance. You're paying for a contract that expires at a set time, but allows you to purchase a security, and the security is like a stock, at a predetermined price. Again, I called Plug Power at $10 for the strike price. It's well above over. It's like $13, $14. I had 100% profit return. I had 100% ROI, return of my investment, okay? But anyway, however, you will have to renew your option usually weekly, monthly, or quarterly basis, okay? So I bought that was a 3-month option, 3 to 4 month option, and I'm making really good money. But again, I'm gonna sell that option probably the beginning of December before the pullback date or some sort of market correction. For this reason, options are always experience what they call time decay, meaning their value decays over time. Okay, so time decay is basically what I've been telling you. The closer you get to your expiration date, the closer the increased volatility of that option and the chances of you losing out on money is very high. Let's move right along. So a put option. A put option is a contract that gives you the investor the right to sell a certain amount of shares, again, about 100, okay, 100, of a certain security or commodity at a specified price over a certain time, a certain amount of time, just like call options, just the same way. But a put option allows the trader the right, but not the obligation. You're not obligated. You have the right to sell a security by the contract's expiration date. So just like call options, the price at which you agree to sell the stock is called the strike price. Just like a call option, the price at which you agree to sell the stock is called the strike price. And the premium is the fee you are paying for the put option. Okay? Same, different. Let's get on this one particular thing that I know a lot of people get into what they call intrinsic value. So intrinsic value mainly refers to an investor's perception of the inherent value of an asset, such as a company, a stock, an option, or even real estate. Knowing an investment intrinsic value is useful for value investors who have a goal of buying stocks and other investment at a discount to this amount. So if you and Hurley see, like a lot of my buddies invest in properties, and I'm looking into investing in properties as well. So when you look at some, you're looking at the inherent intrinsic value of that, of you returning great profit margins off that investment. It doesn't mean that it's worth that amount right now, but the intrinsic value is telling me that the value can be increased if I put money into it or over the course of time if I wait. But again, we still have to factor in inflation. The longer you hold anything and you're paying additional property tax if it's property and you're not making any money off of it, because here's the thing, anything that you have, your car, your house, if you're not making money off of it, it's a liability because it's taking money out of your pocket. So what you're saying is this. I know what you're saying. I know exactly what you're saying. Okay, you're saying my house is gaining equity. That is what you're saying. You're saying my house is gaining equity, so it's an asset. No, it's not. If your house is paid for and you're doing maybe you're renting a room out, renting your basement out, then it's an asset. But if you are paying a mortgage, your home is a liability, especially if that's the home that you're not renting out. We have to understand that a basic definition of a liability is things that are taking money out of your pocket, and an asset are things that are putting money in your pocket. So if you have a paid off car, you have a paid off vehicle, and you're an Uber driver, you're a Lyft driver, right? And you look at your profit margin, you're saying, well, I get an oil change every month because I drive every day, I pay for gas, and you tally up all of your bills plus your maintenance per year, and you tally that versus the amount of money that you have coming in for Uber. If you are in the profit, even if it's $1, okay, it's an asset. It's an asset. Your home only becomes an asset if you sell it. No, not really that, because then it's a profit. See, that's the thing about understanding, understanding a certain level of financial literacy. And I got some new T-shirts coming out. I don't know about, but they call it financial literate, because we need to understand our finances in a very detailed but broad manner, meaning that if I buy this home at $200,000 and I sell it for $300,000, some people say, oh, that was a great asset. Was it a great asset at the time, or was it a profit you made off of your house? Or was it a profit you made off a liability? See, it's much easier. It's much more sensible to say, hey, my house is an asset, and with that asset, I'm gonna make $100,000 off it. But the whole time you was forking out money to your lender, so it was a liability. But you are building up equity. But there's no guarantee, because here's the kicker. There's no guarantee when you sell your home you're gonna make any profit. And an asset makes you profit, so there's no guarantee, because guess what? What if you sell your home in a down market? A lot of people lost a lot of equity in their home, even though they were paying it off plus the principal, they still lost value. This is about intrinsic value. Intrinsic value is an investor perception of the inherent value of an asset, such as a company stock, option, or real estate. So we really need to understand forward thinking about what's an asset, what's a liability, and what truly is intrinsic value. Okay, so what is value investing? Value investing is an investment strategy that involves picking stocks that appear to be traded for less than their intrinsic value or book value. So this is when I really talk about when a stock is undervalued or overvalued. And what does that tell you? I have a video about PE ratios, and I break it down very simply, very layman, because I want you to understand PE ratios help you to understand when a stock is undervalued or overvalued. It's very imperative that you understand that, because that is called value investing. This is how Warren Buffett became a billionaire, because he bought a lot of stocks that were undervalued. Anytime a stock is known to be overvalued, chances are within a year it's going to meet its value or go over. And those are the chance for profits. So first and foremost, you should be option trading. Where are you from? Where you been? You're on this channel. You're on all these financial channels to learn what? I'm from Southeast DC. I never would have thought that I would know this much about finances, that I would be this financial literate, that I will understand how to financially manage myself, let alone other people. But I'm here. Don't let your situation control where you will end up. That's an excuse. See, right now, during these very volatile times, we're looking at politics, we're looking at race, We're looking at how the way that certain people are being treated, mainly African Americans. But that should not stop you from investing. That should not stop you from learning. That should not stop you for striving. Why is it when we reach a certain level of success, we feel as though it's some sort of street cred or street policy or street omen that we need to still live in the hood? No, no, no. If you do better, then live better. Okay? If you live better, then do better. And it's just because you leave the hood, just because you leave the project, doesn't mean that you forgot where you come from. Doesn't mean that you can't go back and help somebody else, that you can go back and teach somebody else. I'm not telling you to give handouts. I'm telling you to give lessons. I'm telling you to mentor. I'm telling you to teach. I'm telling you to go back and give them your knowledge. You don't have to live somewhere to validate what you've been through. You don't need to live somewhere to have street cred. You can go to that neighborhood during the day, teach, mentor, counsel, and then go back to your house in the hills. Okay? So this whole thing that when people reach a certain level of success, that, oh, you forgot where you came from. No, 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 no. I don't forget where I came from because that's why I don't want to go back. Okay, I'm going to spin around again so you can see this shirt. Invest. Invest. Because when you invest in stocks, when you invest in bonds, when you invest in options, when you invest in gold, when you invest in silver, when you invest in property, you are investing in yourself. Oh, I'm trying to start a business. Okay, invest. I'm going to school to be a plumber. Well, invest. It doesn't matter your profession. It doesn't matter your trade. It doesn't matter your certification. This is about investing. This is that person. This is that lady. This is that man. That is that young lady, that young man that lives in the ghetto of Southeast DC, that lives in Detroit, that lives in LA, that lives in Atlanta, Georgia, and you're living in a one-bedroom apartment or you live in a two-bedroom apartment with 10 people, and you say, how can I get myself out of this situation? First and foremost, and you know my favorite word, you have to sacrifice. You have to sacrifice being comfortable. You have to sacrifice your TV shows. You have to sacrifice partying with your boys and girls, and you have to read and research your ass and stop using excuses. Oh, yeah. Oh, yeah. We're living in white supremacy times. You want me to tell you why? It's never stopped. America has never stopped being racist towards African Americans and a lot of Hispanic people. Now, let me ask you this. Have you ever seen Asians get on the public stage? Have you ever seen them do that? No. No. You have to learn about this money. Whether you want to stay in this country, or you want to go to the continent of Africa, or you want to go to the Caribbean, or you want to go to South America, it doesn't matter. The one thing you're going to need is money. And the one way that you can times 10 your Wendy's paycheck, your Burger King's paycheck, your Boston Market paycheck, your secretary paycheck is to invest. Okay, is a probability that you lose money? Yeah, every day. It's a probability that you lose money each and every day. But I can tell you this. You have better chances of 10 times in your money versus you going out being a consumer than you going out being a consumer. What does shirt say? This is Black Logic, baby. This is Black Logic. Okay? So you went out and you bought a lot of stuff. Now you have a lot of stuff. Now you are broke. Now you are broke. This is a very simple shirt. Now you are broke. I'm trying to teach people stuff. Okay? Did you see? Now you're broke. Because you went out and you were a consumer. Because you didn't want to sacrifice. Nobody cares about your situation. Nobody. Nobody. Doesn't matter if you're a Democrat or a Republican or independent or a non-affiliate. Nobody cares about your situation except you. Except you. You are the only person that can change your circumstance. You're the only person that you can change your situation. You. It all falls on you, and it all falls on the amount of sacrifice you are willing to give. No sacrifice, no reward. No risk, no reward. Every day you risk your life going outside your home. Every day you risk your life getting inside of your car. Every day you risk it. Every day you risk it. You would rather go and buy Jordans. You would rather go and buy a purse. You would rather go spend all your money on materialistic things except invest in yourself. What is value investing? What is value investing? That's understanding the PE ratio of a stock, whether it be an option or a bond. It's understanding the overvalue and undervalue. This is how the rich become rich, ladies and gentlemen. You see me on this podcast showing you real gold and real silver because I don't want to talk a hole in your head. I don't want to preach a hole in your head. I want you to be motivated by seeing what somebody is actually doing versus what somebody is trying to tell you what they're doing. It's better when someone shows you what they're doing versus what somebody is telling you what you're doing. Do you understand what I'm talking about? So we're learning about option trading. This is part one. Long options versus short options, okay? Once I go through this definition, I'm going to read some of your comments, do some shout outs. Unlike other securities like future contracts, option trading is typically a long, meaning you are buying the option with the hopes of the price going up, in which case you would buy a call option. Again, call option is that you are hoping, you are banking on the price of that stock going up. But however, even if you buy a put option, which is the right to sell that stock, which is the right to sell that contract and or security, you are still buying a long option. Okay. Shorting an option is selling that option. Shorting an option is selling that option, but the profits of that sale are limited to the premium of that option. Okay. And the risk is unlimited when you short an option. So for both call and put options, the more time left on the contract, the higher their premiums are going to be. The higher their premiums is going to be. Okay. So let's do some call outs here. We got Knowledge in the room. What's up? We have Nolan Baptiste. Good evening, good sir. Knowledge says exactly. See, Mitchell said recommendations on option trading and being active duty military, not having time to monitor stocks as much, farther out expiration dates. Yes, you are absolutely right, Mitchell. Farther out expiration dates. So let me get on my agenda here. Let me show you my plug power option. Okay, let me show you my plug power option. Give me 1 second, guys. All right. Here we go. Okay, so here's my plug power option. Now, to you, you're like, okay, you're decreasing in the value of your option, but let me show you my expiration date, which is December 18th. December 18th. So this is a very long option. Okay. So let's take for instance here. Let's see. My total return is 100.43%. My today's return is a negative 2.72%. Now, as you see here, it says plug break even price is $12.32 and average cost per share at 2.32, because we understand that options are not the same price as the actual stock. It's a fraction of it, because again, it's a down payment on the right to buy 100 shares at a particular price. So it was my right to buy 100 shares when December 18th at $10 per share, which gives me more equity, which gives me more volume in shares within Plug Power. Because when I mature, when I buy that option, if I buy that option outright, now I have 100 shares at $10 based upon that contract, if that makes any sense. But I'm not gonna even do that, because I'm going to take my profits and I'm going to run. I'm going to invest in something else. So let's look at my portfolio, because my portfolio has been down this week. So today I lost about $50. That's okay. For the week, I've gained around $360. I'm up 5%. That's not bad money. For the month, I'm only up $12.80. And for the past 3 months, I'm up $3,200. Okay. So if I average that out, I'm making about $1,000 a month, which really is not a lot, because it's been some weeks where I've averaged $700 that week. So again, COVID-19 is making the market very volatile. So I just like to show you this, because it needs to be transparent when someone is actually showing you how they invest. All right, Mike is in the room. He says, exactly, Brother Ross, you can't be in the hood. When you become success, you make yourself a target. Indeed. You know, that's really something good to harp on right there, Mike. Let me expound on that very quickly. We need to understand, ladies and gentlemen, that as African Americans and as Hispanic Americans, I'm gonna speak to you guys as well, because we always get ridiculed, we always get called out when we start to do well, when we buy the nice house, when we buy the nice car, but our family still lives in the hood. Our family still lives in a project. And you make yourself a target when you have that BMW, that Mercedes, your luxury car, your sports car, whatever it may be, when you start driving to neighborhoods that are stricken in poverty. And your family are your biggest culprits. They make you feel guilty sometimes. Not all families, but a lot of families make you feel guilty. Oh man, you got all that money over there. Why don't you hook a brother up? Why don't you help your uncle out? Why don't you help your aunt out? Why don't you help your auntie? I'm your auntie. Let me tell you something. I went to Japan, and my aunt, she died a couple of years ago. But I have to give you the story to make it very real for you. I went to Japan and I was buying souvenirs for my family members. And I remember I bought this handmade clock. It was beautiful. It was a beautiful clock. It had a little drawer and everything, but it was made in Japan, right? Not in China. Because the lady built it over the course of the time that I was actually spending time in Japan. And Mitchell, I was a Marine. Okay, I was a Marine. So I was in Japan in Okinawa. So I got this clock made. So when I went back home and I presented this gift to my aunt, she's like, oh, that's beautiful. You could have gave me the money. Just like that. No sense of, he really thought of me. They rather have the money. When you give somebody some money, it means nothing to them. They just remember you gave them money. But money is not tangible. Okay, money is not tangible. Money is a tool to buy tangible things. If you go what I mean, you're like, oh, I can feel money, but money is not tangible, because this is a piece of paper, just like this is a piece of paper. The only difference is the Treasury, the Mint, printed Jackson on it, Andrew Jackson on it, and not on a sticky note. So it's a tool. It's a tool to buy something tangible. I was measuring my garage ceiling. I'm trying to get some storage shelves. Anyway, so that's what we need to understand. And unfortunately, we are brainwashed. Let me tell you something. White supremacists, racists, our family, our friends continue to brainwash your success. You are afraid to be successful. You are afraid to move out of the ghetto. You are afraid to move out of the projects. Why? You are afraid of your own success. You keep telling yourself you want to start a business. I know I did. And I finally did. You have to kick your own self in the ass. You got to stop worrying about, you got to stop listening to naysayers. I don't believe that's going to work. You're going to end up homeless. You're going to end up poor. So what? Because whatever you're doing right now is not working for you. And here's the thing. Stop being so easily influenced. It's kind of like It's kind of like the Democratic election, okay? It's kind of like the Democratic election or the Republican election. It don't even matter. Everything gains your attention. Why are you so emotional? Everything gains your attention. They now they're debating if Kamala Harris is black or not. Who cares? Is that going to help your pockets? Is that going to help your portfolio? Is that going to help you to invest? Okay, let me help you out. Is Kamala Harris African American? No. Is she black? Yes, she's mixed. Jamaicans are black. Okay, let me take that back. Jamaicans are a nationality of the country of Jamaica. Now, if a descendant of slaves on slave ships landed in Jamaica in the Caribbean, if her father is a descendant from one of those Africans that came over, then she is black. Okay, she is mixed with African blood. Let's just get it out the way. Okay, but usually when we talk about black, we're talking about skin color. Then we kind of get into Black America. See, we are easily distracted about the goals. We are easily distracted about the code. Why are we worried about her race? Okay, she's not African American, but she's black. Should you vote for her? Should you not vote for her? How about this? How about this? You want to learn? You want to know who to vote for? You want to know who to vote for? Vote for the candidate that comes up with a black reparations agenda. Vote for the candidate who's on code with black people. Vote for those candidates. Vote for tangibles. Vote for tangibles. Not for, we're really going to do a lot for minorities. We're really going to go into the urban neighborhoods and clean up. We're really going to stricken poverty. We're going to get free health care. That's not for us. That's not for us. When you go into those Hispanic neighborhoods, when you go into those African American neighborhoods, you know what they're doing? They're gentrifying the neighborhood. They're pushing you out because they want the city back. They want to go to their bars, their clubs. They want to have a great time, go to shows. They're pushing you out to the low, ran down suburbs. Just because I say suburbs don't mean that the houses are nice. Because there's a lot of suburbs around Washington, D.C. that the houses aren't nice. Suburbs just simply mean you're not in the city. You're in the sub-city. You're in the suburbs. Understand language. Why do you think they're doing it in D.C.? They're doing it in cities around the world. They're going in where black people, where melanated people, where African descended people live, because the reason why a lot of African Americans and people of African ancestry live near cities, because that is where the jobs are. It's been that way forever. Since they ever released us from slavery. And I said release, not free. Okay? If anybody ever heard me, we was released, not freed. We were let go, not freed. And we all went to the city because that's where all the jobs of being a servant was. Our daughters, our mothers, they were mammies. They were taking care of white kids. Okay? They were taking care of everybody's kids except their own, to bring in money to pay for the rent, to pay for the mortgage, to pay for food, while the man was working maybe a low-end construction job or taxi cab driver, or during those times back in the day it was white. So the buses at some time when after the whole Rosa Parks thing, then was it 10, 20 years later, that's when they started having the first black bus drivers, maybe onesies and twosies in there, but on a large scale, no. So we need to understand what this is about. Let me tell you, why am I saying this on the option trading? It's about social economics. It's about the ability, it's about the opportunity to gain wealth, Let me tell you something about the stock market some of you probably did not know. The stock market is not racist. The stock market is not racist. Most of us have white names. So when you sign up for your investment account, they don't know unless your name is Tyrone. Hopefully people are not still naming their children Tyrone. Okay, I met this lady. I met this Nigerian lady in Home Depot the other day, and her name was Hazel. And I said, Hazel, That's not your real name. She said, yes, it is. Some white missionaries came to my town when I was very young or before I was born, and she has one of the white missionaries' names, okay? And I said, oh, okay. I said, well, what is your African name? I don't recall. And then she said, well, what's your name? She said, Ray Ross. Your name is not Ray. Your name is not Raymond. I said, no, that's the name I was born with. She said, no. That's the colonizer name that was given you. She said, you need an African name. She said, you look like you're from Ghana. You're Guyanese. So I'm going to give you a Guyanese. And I said, what is that? She said, Gofi. Your name is Gofi. Now, granted, I don't know how to spell it the way she spoke it, but I'm thinking it's Gofee. I'm silly with it, okay? Gofi. But I accept that. I accept that. But understand, family, where we come from. So if you believe that investing is not worth your while, then just go ahead and go to sleep tonight. Go ahead and go to sleep. Keep living in your projects. Keep riding your bucket vehicle. Don't want to do better for yourself. You better be like George and Weezy and move on up. Do you understand? We can make the George Jefferson show positive or negative. So let's look at the positive. I won't even deal with the negatives of the show. The positive thing is that he moved up into a condo that was very expensive in a white neighborhood. But the key to this story is he owned property. He owned a string of dry cleaning services. So we need to understand the importance of investing, whether it be in virtual, whether it's Bitcoin, digital, whether it be in real property. We have to understand the power of investing. And you need to learn how to option trade. Now, today was a basic segment, just understanding of option trading. On our second part, we're going to get into the technical details of option trading. It's going to be technical, and I want you to take notes. But today was part one, very easy, some definitions, some explaining. But I need for you to be charged up about this thing. See, when people get on YouTube and they rant and rave, and you're like, oh, you fire, oh, you on fire, you're doing a great job. Oh, man, you tell them. Don't do that. Don't do that. I mean, applaud those people who are inciting motivation and firing you, yeah. But don't do what you do at church. Oh, preacher, oh, you tell him, preacher, oh, you tell him, preacher, oh. And then you go home and you do the exact opposite. It went in one ear and not the other. When you were in church, you were on fire. You were on fire. You were like, praise him, do this, do that. As soon as you got home, it went in one ear and not the other, and you forgot. What did you talk about? Wait a minute, what was the lesson on today? What was Pastor talking about? What? Don't do that. Don't do that here, Financial Literacy 101. Don't you do that. You take these words and you apply them to your life. You apply them to your life. And you apply it to your vote. You apply it to your vote if you vote or don't vote. Now, some of you, excuse me, have not voted before. Some of you have voted before. Tell me the last time you vote, what has changed for you in your life? What has changed for you in your life being a descendant of a very powerful people back in Africa until they were brought here in 1619 by the way of Jamestown, Virginia, and now you're essentially a descendant of slave, okay? ADOS. But what we need to understand is we need to stop carrying this bag on us. I'm a descendant of a slave. No, you are a descendant of a powerful people. You are a descendant of the first people. You are a descendant of very intelligent people. And stop let people tell you that the black people around you, that the brown people around you are stupid. No, they're not. They're uninformed. They're ignorant. See, I had a conversation today with my honey. I had a conversation today with my baby, and they got fired up about what Akon was saying. I won't get into the vivid details of that, but what I will say is this. A lot of us come from poverty-stricken neighborhoods. We come from the hood. I know I lived in Southeast D.C. I've seen a lot of things I shouldn't have seen. I've seen my Uncle John getting shot, blood all over the wall. And it changed me forever. I've seen people get shot. I walked over a dead body before. I haven't really even told anybody that. So I've seen a lot, but that should not define, that should not determine or predetermine where I should be at in the future. Okay? What happens is in the ghetto, what happens in the hood is that majority of us, and I'm speaking from my own personal experience, that when I'm in the hood, when I'm in the ghetto, I'm like this. I don't see nothing outside of my blinders. I see my hood. I see my friends. I see my people. I see police brutality. I see colorism. That is what I see. That's all I see. That's why it's important for you and I, people who have seen more than your neighborhood, people who have seen more than your city, people who have seen more than your state, you go back and you give back. You don't have to give back money. Give back your time. Say, hey man, let's go over here. Let's look into this. Take them to some workshops, some free workshops. They're downtown that they never knew about. Ignorance is just the lack of information. Why do we put a negative connotation on ignorance? You're ignorant because of that. Ignorance meaning the lack of knowledge in that particular area. That's all ignorance is. Then if you are not ignorant on a certain topic and they are, say, hey, let me educate you. Let me mentor you. Let me show you. There's a way to everybody's heart. Man, you know, the only thing I know how to do on these streets, man, I'm getting it. I'm doing this, I'm doing that. We have young brothers and sisters out there on the street selling drugs, on drugs, prostituting, killing people. I'm not telling you to risk your life. I'm telling you, if you want to give back, if you don't want to feel like a sellout, then go back and mentor. Go back and counsel. See, when I was in Washington, my first couple of years, I was counseling at the local Boys and Girls Club. Because when I grew up in a group home part of my life for the Boys and Girls Club. And that was my way to mentor people, to tell them, because of your current situation, has nothing, it's part of your journey, but it's not your destiny. It's part of your journey, but it is not your destiny. So stop with the excuses, stop with reasoning, and get out and do something. Investing is one of the easiest things that you can do from your phone, from your home, and it doesn't matter where you live. It doesn't matter where you live. First, you have to sacrifice. Second, you have to read and research. And third, you have to do it. Very simple steps. The reason why sacrifices is so important is because you don't know what sacrifice is. You believe that you sacrificed because your homeboy got killed. Why did your homeboy get killed? Why? Was it a senseless shooting? Was it why? And here's another thing. Why you want to stay in a neighborhood? Why you want to stay in an area that people are getting killed, that people are dying, that police come and over police your neighborhood? You should be fighting. You should be fighting and sacrifice and struggling and doing everything in your power to get out of that damn neighborhood and do better for yourself. You're saying to yourself right now, I don't have any money. I don't have any opportunities. I don't have any chances. I have my email in the description, and I can tell you a lot of things you can do with no money or very few monies. Did you know that you can walk door to door? You can go to suburban white neighborhoods and walk door to door and ask to cut their grass and make money. Ask to rake their leaves and make money. And I'm not just saying white, because there's prominent black neighborhoods too, so don't get me wrong. There's prominent Asian Hispanics. But we know what it is in this country. And you can go make money. See, stop thinking about all the things that are against you. Try to think of things that are for you. Think outside the box. Think outside your neighborhood. Think outside your hood friends. And nothing is wrong with being hood. But there's a time and place for everything. If you want to elevate yourself, if you want to elevate your family higher than the hood you live in, then you have a lot of sacrificing to do. I've sacrificed. I lost my mom when I was 12. I never met my dad. I lived in a group home half my life. But I did something with my life. I made decisions and choices. I made a lot of wrong decisions. I would have been a millionaire by now if I would have made some right decisions. But I'm going to keep striving. I'm going to keep pushing. And I'm going to keep sacrificing. I'm going to do some call outs and I'm going to get out of here. Mitchell says, awesome. I'm Army on recruiting duty right now, going back to the fleet in a few months. Been pretty successful trading the option, trying to seek advice on how that looks being back in the regular active duty. Same thing, my brother, same thing. Long-term option, so you don't have to look at it every day. I remember, I was in the Marines and I was also in the Army. Okay, I was also in the Army as well. And I remember I was day trading and my captain, he got upset because he's like, you're not day trading. Unfortunately, I'm saying this for a reason. Unfortunately, he was white. And I don't know if he was stereotyping me. He's like, you're not day trading. You're just over there playing on your phone. And then somebody else was like, no, he's really day trading. He's really trading right now. And I showed him and he was like, oh, I didn't know that. And I said, did you know that me and the colonel actually talk about, buying certain pharmaceutical stocks and buying them at a low price and selling them at a high price? And he was like, oh, yeah, he didn't know what to do with that. What else do we have? He also said recently got into dividend investing, my profits from option trading. Okay. And then knowledge says my condolences. Let's talk about dividends real quick. And I'm going to get out of here when it comes to option trading. The buy and hold method works sometimes, not all the times. We have to understand that the buy and hold method, in the example, if you're just catching this right now, the example I gave earlier, if you would have bought Ford at $15, anywhere between $15 and $13, and you hold on to that stock, if you notice, Ford is around $67, okay? Ford is around $67 right now. And you would have lost a lot of your money, not only because they depreciated in their stock price, but if you're banking on dividends, Ford dividends only 15%. There's a thing called inflation that totally wipes away your dividends from Ford. Okay? Okay, today, if you go back and look at my Ford stock review, I bought $100 worth of Ford, $100 worth. Not 100 shares, $100 worth of Ford, because what I like about M1 Finance, Webull, and Robinhood, you can buy in fractional shares. So you can do in dollar amount. If you guys want to get into investing, look in the description below. I have a link for Webull as well as Robinhood. Free commission. Free commission simply means that you can trade on the stock markets and not pay one single dime. We have to understand traditional investors. Now, all of them are now becoming free, but prior to then, every time you made a trade, whether you was buying a stock or selling a stock, you had to pay a commission price, okay? So, ladies and gentlemen, that is this segment for today for option trading part 1. Hopefully you enjoy yourself. If you like this video, thumbs up, thumbs up, thumbs up. B1, y'all know what that means, B1. Also, if you guys are looking for any merch that's simple and straight to the point, look in the description below. I have my merch there. There will be more shirts coming. They're called Financial Literate with messaging on that as well. So hopefully you guys like this, okay? Hopefully you guys like this. Let me know after this video ends. Leave some comments below. If you have any questions about anything, I'm available to answer any of your questions. You guys have a great and wonderful evening. This is Financial Literacy 101. Learn money and be inspired. I'm out.